Hello guys, welcome back. Nykaa's bonus share issue was one of the most brilliant strategies by a company, but at the same time, it is one of the most evil things to be done by a company to trap its own investors to not allow them to take their cash out when they decide to do so. Let's entirely understand how this bonus share issue works and how the startup funding works and how a bonus share issue can trap your money and how bonus share is a double-edged sword for a company to trap its own investors. Let's understand everything in today's video. So guys, you might be thinking, how does this bonus share issue trap its investors? To understand that, let's start from the base of funding. So if you think about startup funding works at different series. So to begin with, the startup, when they require funds, they start with a seed fund. So it is the initial fund that the startup gets to start its operations and to move forward. So this seed fund acts as the starting level. And then when the startup needs again more money, they raise series A, series B, series C, and each of the further series, it is coming at higher and higher valuation. So if the series A is 100 million, series B would be 200 million or 500 million, and it moves up and up and up until it reaches the IPO stage, and where it has matured a lot and it has created a big market for itself, and now it moves on to the retail public and gets listed in the stock market. So why does this IPO be of so much priority to all its investors? It is mainly because all these investors who have invested in the company from start at a series A or series B, they cannot easily switch up their position or get their shares back into the different investors and get money for it. They cannot do it easily. So all these investors wait for the company to go IPO, so that time they will be able to liquidate their positions in the company and get liquid cash for it. Because at the start, if the company is growing from 100 million to 200 million in the next round, the wealth of the shareholder has increased, but at the same time, actually there is no cash coming into any of the shareholders. It's all paper wealth. So in order for this paper wealth to be converted to actual money or liquid wealth, they need to go IPO. So that is why IPO is of so much priority to all the investors. And even as Indians, we retail public is very excited about IPOs. You know, now IPO is a big move of the season. It has come down, but still people are very excited about different IPOs coming up. That is mainly because we Indians want to be part of the future of India. We are already investing in traditional businesses like Reliance or Tata, but now we want to move from this traditional business. In order for us to generate more wealth for us, we want to invest in the future of India, like the tech startups and the future startup businesses. And the best way for us to do it is to invest in IPO. So it is actually a good thing that the retail public is very interested in it, and even the investors are getting a lot of benefit out of it, because their investments would be growing by 10x or 5x or 8x. It is a big move for them, and they're getting a lot of money out of it. But in order for this all to sustain very well, the company needs to make a lot of money. The company needs to be in a very healthy financial situation and do not make headache for its own public. If the startup, when it goes IPO and the people are not interested in it and the share price starts to come down, then it's a big different story that is going to come up. And that is exactly what happened to Nykaa. So I am simplifying the entire process just for you to easily understand it. So Nykaa, once they went for IPO and they got their shares listed into the public, the shares started to move up. It was so successful, people liked it, and the share prices kept on moving up and gave a lot of returns for even the IPO investors. But after that, the share price started to plummet. And initially, everyone was very aware about it. It was okay because share prices tend to fluctuate here and there just for the sake of it. But what happened with Nykaa or Paytm or Zomato and all is, it kept on falling because the root of the company is not strong. Because people, when they look at the financials or anything, the company is losing money every single year, and the future trajectory of the company do not look positive. And especially with coming with recession and falling profits, Nykaa was the only unicorn that was actually profitable that went into IPO, and even that profits are falling by 90%. It's not acceptable by people, and people started to lose interest and trust in the company. Seeing this, the investors who invested in the early rounds, even though they liquidated some of their positions in IPO, full positions could not be liquidated. Because just for you to understand, if the company's total worth is 100 percentage, when they do IPO, maybe they are only releasing 10 percentage or 20 percentage of the company. They are not releasing the entire company into the public. So the 20 percentage which they are liquidating into general public and giving for IPO, that is the only amount that the shareholders are going to get, like the investors who are going to get. The balance positions what they hold is still with them. So unless they are confident about the company's future, they do not want to hold the shares, so they want to sell it. In order to ensure that the share price do not fall after IPO, the government has kept mandate that all the pre-IPO investors could not sell their shares until and unless it is minimum 6 months for the investors who are not participating in the company. And participating shareholders or the people who make decisions, they cannot sell their shares until 1 year. So it's the minimum requirement. So if this 6 month period is not covered, the shareholders cannot sell their balance shareholdings into the public and get money for it. Investors were waiting for the 6 month period to get over so that they can sell their shares and get cash for it. But Nykaa and its management knew that this was going to be a disaster for Nykaa, because already share price was coming into a big red line and it was going down much than they expected. The company will go into itself a big difficult situation. And Nykaa management knew that if this is going to happen, this would create a lot of fear in the market and the Nykaa share prices is going to dip again more. So in order for this to be prevented, Nykaa did not have any other option, but they used this brilliant strategy. They introduced the bonus shares and locked out all its investors from selling their shares. And what happens future is more interesting, and we will be coming to it. Just before the 6 month lock-in period after the IPO is going to be over, Nykaa's management strategically introduced bonus shares for each share held by the investors. So what they did was they introduced 5 bonus shares for each share held by any investor. So if the shareholder was holding 1 share of Nykaa, now he would be having 6 shares of Nykaa because 5 bonus shares have been added. So to understand about what bonus share is a very simple concept. It is just to divide the total number of shares into more number of units so as to reduce the total price of the shares and to increase the liquidity and improve the growth of the company. So if bonus share issue is a good thing, then how does it trap its investors? So for that to be understood, if 1 share of Nykaa is now 6 shares and 5 bonus shares have been introduced, think about it. The total value, if the share price was 1,800 rupees, just for you to understand, the share price of 1 share of Nykaa was 1,800 rupees. Now it is getting 5 bonus shares. So the total value of investment will not change, it will not increase. But the total value of 1 share will be divided into 6 pieces. So now, after the bonus share issue, each share is worth just 300 rupees. So what happened for the investor is his money did not grow. His money did not get increased, or he did not get any other benefits. The only benefit what he got is the value of the share is same, but the number of shares have increased. This you might think it's a good thing. Why should it be an evil strategy? But for a company point of view, it's normal. Bonus share will not bring any difference. But from tax point of view, from the point of view of getting taxed for the selling of shares or getting benefit or profit out of the share investments for long-term investing or short-term investing, that's where the trap is. Two type of taxes in India. There is short-term capital gains tax and there is long-term capital gains tax. So short-term capital gains is when we sell our shareholdings within 1 year of getting it, and if we get a profit out of it, we need to pay short-term capital gains, and that is of 15%. And if we are selling our holdings after 1 year and getting profit for it, we need to pay 10%, and that is long-term capital gains tax. So the Nykaa's shares, obviously it's held for a long time and it should be taxed at long-term capital gains and of 10% for the profit they have made. But because of this bonus that has been issued by the company, now this all changes. Because from the tax point of view or from the government point of view, the shareholder earlier was holding 1 share. Now he has got 6 shares. And 1 share value was 1,800 rupees. So that 1 share value has gone from 1,800 rupees to 300 rupees. So there is a loss of 1,500 rupees. But at the same time, before the shareholder was not having another 5 shares, and he got this 5 shares for 0 rupees. Obviously it's like free. It's from government point of view, it's free, and now that has value of 300 rupees. So his profit what he have made is 300 into 5 shares, and that is 1,500 rupees. So now you might be thinking this 1,500 here and the other 1,500 can offset each other, but no, because this 1500 loss which has happened is long term capital loss, and that is actually loss which we can carry forward and utilize against any other capital gains which we have. And the sad part is we cannot offset each other, and we need to pay tax for this separately, and that too for whole 1500 rupees we need to pay 15% tax. Actually, if you think, the shareholder had already invested a lot of money into Nykaa's shares, and that is why he have all the shareholdings. And now what happens finally is he has profit of 1000 and loss of 1000, and evidently he is made to pay taxes for her entire of its investment what is worth. So if Nykaa shares is worth 1800 rupees, he is effectively paying taxes for all of the amount. I'd be thinking it is simple thing, it can be offset or you can pay taxes, what's the big deal about it? But think about it, he had invested already a lot of money to buy Nykaa shares, and now he is effectively made to pay taxes for all of his investment. It is not the profit just made because of this bonus share. All of his investment is made to pay taxes. Think about it. Before, if his investment was earlier 500 rupees he had invested, he had made a profit, now 1300 rupees profit, it will be taxed at long term capital gains tax of 10%. But now he is paying taxes for whole of 1500 rupees, that too at 15% short term capital gains tax. And that's a big amount, especially considering the investors who have invested pre IPO, they will be having a lot of shares. It is not like retail public, they are big investors investing millions and millions of dollars into the company. So if they are getting trapped into this tax system, they will be losing a lot of money just because of the tax play. And what Nykaa's management expected is these investors, because of this tax play, they would not sell their shares, and Nykaa's share price would continue to be in a comfortable situation and will not fall. But you should understand, the investors lost so much of trust in Nykaa that even after this strategy, investors did not panic, and they kept on selling their shares after the 6 month locking period. Even if they incurred a lot of losses in terms of taxes and other things, still they went forward with the decision because they lost complete trust on company. What I would say to retail public is, if the institutional investors and venture capitalists, they are losing this much trust on the company, think about the company's situation. And this is what we are going and investing. We, as you and me, we see the IPO from outside, we see the glamorous movements and glamorous stories about the IPO, and we invest our money into it without knowing anything that's happening in the back end. So this is, even the retail, even the institutional investors are not trusting the startups now, and we are trusting them. And think about the situation moving forward. So this story is very, very important, because these investors who trusted Nykaa and helped them compete with Amazon and Flipkart and become a big unicorn, Nykaa went against those investors and tried to trap them from not selling their shares and affecting the company. Think about it. What Nykaa did is completely legal. There is nothing illegal in it. It's a simple strategy done by any company. It can be done by any company, and it's completely legal. But what they did is completely morally incorrect, because if they would have introduced bonus share with a positive attitude and they wanted to give back to the investor community when the share price is very good, and just for people to get benefit out of it, it was very good and it was a positive move. But what Nykaa did was, when the share price is already plummeting and it is not in a good stable situation, they did this bonus issue just to trap its investors who trusted Nykaa and stood with them for so many years. And at the end of the day, they are making the investors to lose money because of Nykaa. If they did not do this strategy, the investors would have not lost this much amount of money just because of tax working and tax regime and how it works around with the long term and short term capital gains. Even after that, the investors sold it. So think about how much trust the investors would have lost in order for them to take a beating in terms of losing a lot of money. Still, they went forward with the decision because they do not have any trust in the Nykaa's forward game, or they do not want to stay with this company who is trying to cheat themselves. And that is the entire story that I want to drive home. Whenever you invest in any company, let it be IPO, let it be startup, let it be institutional, big players, or even big companies that is existing right now in India, make sure that you take that decision with complete knowledge or complete understanding. Or if you are not able to understand about that company, stay away from it. because that profit which you might be making is very, very likely that you will lose it in any another trade. So you might be thinking why I am being so pessimistic and asking you not to invest in the future of India. I am not asking you to not invest in the future of India, but I am asking you to make your investment with complete knowledge. If you have knowledge about the space, if you have knowledge about the company, do invest, no problem. But if you do not have proper knowledge about that space and things, and you cannot understand what's working, please do not invest. And you are better off investing your money in FD, or even move forward with a good mutual fund, because that mutual fund manager, he will take care of the back end works to understand the company, and he will invest it for you, and you will get a comfortable return which will be at least expectable, that it will move forward with a good rate of return and you will make money. So that's it, guys. So I hope you understood a lot of thing about bonus share and how it works in the system of startups, and how it can affect even you. You might be very happy when you hear about bonus share issues, but now you will be taking a cautious approach about thinking, why did this company introduce bonus share? And that is the knowledge that retail public need to have, and that is what we are trying to create through our channel, and to make you understand about complex financial workings and the financial strategies in a very simple and approachable way. So if you did like this video, do click the like button and do share it to your friends. Also make a comment about how you feel about this situation faced by Nykaa investors. Until next time, it's a bye from me.